Hey there, this is Nick from Income Digs. Welcome to this video tutorial. We're getting into QuickBooks Online and we're going to talk about escrow accounts. So for those of you who have mortgage payments and you're paying into escrow, it can often be confusing as to how we deal with those escrow payments into and out of that escrow account within QuickBooks Online. So I'm going to break it all down with you today, show you exactly how this works, how I do it in my business, and how you can do it too. It's really not that tough, but I understand how it can be confusing. So remember that everything that we're teaching here is available in our end-to-end course, Real Estate Accounting Bootcamp, but we dive deeper in more detail with examples and with my help to assist you with any questions that you have. So if you're interested, definitely check out Real Estate Accounting Bootcamp. But let's get into this lesson. I want to make sure we cover this thoroughly, make sure we get everything we need to into this video. So what I'm going to do is I'm going to bring up a balance sheet. Now I'm going way back in time. I'm recording this in 2023, but I'm going to pull up a balance sheet as of 2018 because I want to keep it really simple and have just one kind of property on our balance sheet. So to do that, I went back in time and I have this property here that I bought for I think it was like $250,000. Okay, so I translated a HUD statement into my balance sheet. I'm going to show you that journal entry and that HUD statement. But if you want a refresher on exactly how to enter that journal entry in great detail, remember that we have a few videos on that. We will link to them in the description. So if you're uncomfortable with how to add the HUD statement, watch those videos. I'm going to kind of go through it a little bit faster right now. So here's the HUD that we're going to reference. So we bought this property, $250,000. We had some settlement charges. We have a loan on this property, and of course we do because this video is about escrow accounts. Okay, so we have a loan on this property for an initial principal of $134,306.91. Now it's an odd number, so I can make the numbers work. Usually this is a little bit more of a, $134,000, right? Sometimes it's an interesting amount if you're trying to cover certain closing costs, so that's not completely out of the ordinary. But just for demonstrating this, we have a loan principal of $134,000. Okay, we have some other costs and credits and stuff going into that. And on this loan, really importantly, this is very common that our mortgage company is requiring us to pay into an escrow account. So in this case, we have $1,250 for homeowners insurance and $2,509.26 for property taxes. They're going to give you this amount. The total of this is $3,759.26. So this initial at closing amount, that goes into our escrow account. I'm going to show you that on the closing statement, and then we're going to pick up all of our payments into and out of that account. Okay, so on our closing statement, I'm going to drill down into this. I've already created it, but I want to review it with you. Let's look at this closing statement here and compare it to the HUD. I'm going to bounce this out, and we're going to compare these two. Okay, so I have my purchase price, $250,000. I've split that up between land and building. Again, if you're not sure how to do that, check out our videos on the HUD statement. Closing cost of $6,400. I've got some property tax credits here, expenses, $225.45 and then $1,550. I paid interest. I have an origination fee on my loan. Okay, so that shows up here. There's my origination fee. Okay, I've got closing costs, $450. I've got some daily interest, $132.47. And there's my escrow right here. The combination of these two, that goes into our tax and insurance escrow account. So if you don't already have this account, you're going to need to add it. This is going to be an other current asset account. The money is ours. It hasn't been spent yet, but we don't have control over it. It does leave our bank account. Therefore, we must put it into this account here. And we're going to be tracking this over time and making sure it's in sync with what our bank says the value is there. Okay, back up here, I have my purchase deposits, $20,000. There's my loan, okay, conventional loans. Property tax here, I have some credits on taxes, and then eventually I come to the table with my checking account to close on the property. Okay, so as of the date I close on this loan and on this property, I will have an exact conventional loan value of $134,306.91. Okay, that's my starting point. And then I'm going to be making payments against that principal. So every month I'm going to have a payment due, and it's going to be principal, interest, and escrow. I'm going to have to split up that payment into three different lines. Okay, so if I fast forward my balance sheet to January of 2019 in this case, I'll run that report. nothing's really changed yet because I haven't made a payment. And I'm going to drill down into this loan. Okay, and there you see my initial principal is there, and that's it so far. Okay. Now, what you're going to do is you're going to get statements on your mortgage. Every single month, you'll get a statement that says you paid this much, here's how much principal, here's how much interest, here's how much escrow. Okay. Now, your payment might not change, but the values going to each of those categories will. So you have to decide how you're going to deal with it. But what I recommend you do is that the first payment of every year, hit it exactly. Okay. Hit it 100% exactly. Use the exact statement. Okay. I'm going to show you what I mean by that. Here I have a year-end mortgage statement. So this is actually fast forwarding. This is actually a 2022, but let's just pretend that this is a 2019 statement. This is going to tell me how much I've paid, and it actually has a really nice breakdown here. Every single payment I made from January, February, March, all the way through. Here's the transaction amount. Here's interest, principal, okay, and escrow. And then notice that it's got some extra stuff in here where payments are made out of my escrow account. So this really tells me the entire story of the entire loan. And so what you can do is you can certainly go statement by statement, adding the same values for every month. But what I actually recommend you do, and I'm going to show you this, is you just kind of use whatever you do for January of the year, just copy it for every other month, and then just tweak it, okay? And just tweak the amounts. And I'm going to show you that. But what I want to do first is I want to add this transaction. So we're going to add this expense in and see how it impacts my escrow, how it impacts my loan principal. So I'm going to add an expense. Okay, so payment date, really important. This is going to be the 1st of January, 2019. And here I want 3 categories. I want one for interest, cost of goods sold. I want one for principal, which is going to go against my conventional loan. And I want one for escrow. So I'm paying into my tax and insurance escrow account every single month. I'm adding to it. Okay. Now, how much is it going to be? Here I have interest $531.63, conventional loan, principal $305.61, tax and insurance escrow $10.16, for a total of $1853.24. Perfect. Okay. Now I am tracking class for my property, so I'm going to put in my class right here. So Swan is the name of my property. Okay, and I can save and close that. So what happens when I record that transaction is my loan balance should go down by the amount I paid into principal. And here, $134,001.30 exactly matches my principal balance as it shows up on my statement. Great. Okay, what else happens? If I go back to my actual balance sheet, my tax and insurance escrow should have changed. If I click into that, you can see that my tax and insurance escrow started with my initial funding, and then I added $10.16 to it, giving me $47.75.26, exact match. Perfect. And then lastly, where does my interest go? My interest goes to my net income. And I don't have anything else in here yet. All I have is my negative net income from this interest, $531.63. Okay, so that's one payment, right? So what do we do with all the rest? What you can do with this is you can create a recurring transaction, you can create rules within the banking feed, or you can just manually copy these, okay? And this is what I've done. So if I click here, more, and copy, I don't have to, all I gotta do is change the date, okay, to February, and I just gotta change the interest amount, the loan amount, etc. So I can go in here to the interest amount, looking at February, it's 530, okay, 42, and then my long-term, my conventional loan goes to 306.82, and my tax and insurance escrow stayed the same. And I can just save and close it. I don't have to redo my classes. Now I've already created these, so I'm not going to save this one. I'm going to continue without saving. And I'm just going to fast forward. I'm going to go back to the conventional loan, actually. I'm just going to fast forward to the end of 2019, which is going to get me exactly in line with the statement. So if I run that report, you can see I have a payment for every month, okay, January through the end, and here's how much I paid into principal. I've got my 305.61, then 306.82, then 308.03, 309.25, etc. And I didn't have to do much extra work here. I just kept hitting the copy button. I copied them all down, then I went in and tweaked this. Great task for a virtual assistant to do, by the way. Okay, have your VA go in and edit these amounts every single month and check that the balances check out. Okay, so if I look at the end of the year, I've got a principal balance of $130,558.70. Perfect. Boom. Right there, right? Now, I haven't yet, I'm going to demonstrate this for you on this video. I haven't yet put in these payments yet. Tax payments, insurance payments, okay, or interest gained on our escrow. I'm going to do that with you live here. Okay, but one other thing we can check right now is our interest. Usually, our loan statement will say how much we paid in interest over the year. Okay, so in this case, I have mortgage interest received $6,298.67. If I change this report to be just 2019, and I drill down into my net income, there's my interest, $6,298.67. I can drill down into that. And just like I had for my principal, here's all my interest payments. That should mirror exactly this, okay? So there's my 531.63, 530.42, all the way down. The only thing I haven't done yet is my escrow account. So a lot of us get confused as to what to do with this escrow account. And the most common mistake I see is we'll take those payments, it will take that 1016, and we'll say, you know what? That 1016, it was... 500 of it was for property insurance, and the rest was for taxes. That's kind of how they want it to go, right? That's not right. That's not correct. What that's going to do is that's going to show on our P&L when we actually haven't paid that yet. So we want it to just fund the tax and insurance escrow over time. It's going to go up, 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 up. And then when we spend money out of it, it's going to start going down. And that's going to be really easy to deal with. Okay, all we need to do there, and they've changed this recently. Let me see if I can create an expense with it. Okay, so we're going to use tax and insurance escrow as our payment account. And here I'm going to do 1/1/2019. I've paid taxes. Okay, so I've paid property taxes in the amount of $29.9304. Okay, so $29.9304. My customer is Swan. Let me save and close that. Perfect. Let me go back to my summary report. I'm going to drill down. Oops, let's go. Balance sheet 2019. I'm going to drill down into the tax and insurance escrow. Okay, and as of 1/1/2019, my value is $1782.22. Perfect. Okay, and I can take this transaction that I made where I paid property taxes, and I just copy that. It's super easy. Okay, so I've done that once. Let's copy this. And again, great task for a VA. Okay, so I've done 1/1/2019. Let's go down to right here. 6/1/2019 is $2,780. 6/1/2019 is again property taxes. It's city tax this time, and you can write city tax or county tax, whatever it is, $2,780. I don't have to change any of that. I've already done it all. I can save this, and without even leaving this screen, just click here, copy it. Okay. Now I got, well, let's skip ahead to my school tax. Okay, 9/1/2022. Okay, I don't have to change anything there. Just change school tax, 4493.8. Okay, looks good. I'm going to save this. And the only thing I have to do now is property insurance. So I'm just going to copy this one last time here. And hazard insurance, 728. Property insurance is 2268. Okay, it's found right here. And I can save and close. Okay, so what that does is it gives me all these different transactions. All the money going in, every payment I make, it goes in. Okay, and then all the money coming out, expenses coming out. All right. So I got my property insurance, I got my taxes. Now, where did that other taxes go? Let me go all dates. I feel like I might have made that 2022. I've been messing with this other account elsewhere, so bear with me a second. Let me find this. Yep, I just made it 2022. My bad. Okay, you probably saw that happen. So I'm just going to change this back to 2019. Let's readjust my dates. Okay, there we go. Okay, now we're close. But the one thing that I haven't done yet is accounted for interest on escrow. Honestly, it's kind of tedious and annoying, but we do gain interest on our escrow account. Remember, that's our money, and so it's sitting in a bank account, we gain interest. And that's what these little amounts are here. $16.80, $26.13, $21.37, $13.56. They usually do it quarterly. All right, and so for these, I just do a nice simple journal entry, nothing much to it. Could do a deposit if you want. I just do a nice simple journal entry. Okay, so I'm gonna go this one on 3/1/2019. Okay, and we're gonna do tax and insurance escrow account. We're gonna debit it, the amount that it goes up, $16.80. Okay, and then we should have like an interest income. Okay, if you don't have that, you can add it or put it under other income. And that's all it is, just other income. I am using businesses to track. You don't have to be doing that. I'm going to put in Swan. And just like the other transactions, we do this once, save it, and now I can copy it. So I'm going to copy it. I'm going to do, okay, we got March. Let's go to June. And the amounts change every time. Here's June 2613. So I'm just going to go 2613 here, 2613 on the credit side as well. Save it. Oops. Oops, okay. And then we're going to copy that again. Now we're going to September. September was 2137. Save it. And one last one, we're going to copy this once more. 12/1/2019, 1356. Okay, again, great task for a VA. Do it once, show your VA how to do it through Loom, and then check their work. You know, just make sure your balances look good. And how do we make sure our balances look good? At the end of the year, I should have an escrow balance, $3763.56. And that's exactly what I have on my report here. Okay, we look at all of, the escrow in and out. They usually give you a really nice column, like what I'm looking at right here. Okay, if I get into this. Here's all the money going in, 1016, negative 2993, 1016, 1680, 1016. Notice that it went up to 1037.12. That's going to happen. You're going to get an annual escrow statement, and your amount will change a little bit. You're either a little high, a little low, so your escrow amount goes up or down. That's going to happen. Just make sure you're looking out for that, and you can make those adjustments. But your escrow balance every month should equal what you see on your statement there. Okay. Now, the other thing we can do is we can check our net income. So not only do we have our interest on our net income, but now we also have our property insurance and our property taxes. And sometimes these statements will even tell you that stuff as well. So let's see here. Yes, 10,187.64. Perfect. That's exactly what we want to see. All right. So we just bounce this up higher. So that's what we're looking for with our escrow. There's our interest income, by the way, too. Is we have to think about our escrow as kind of like a bank account. that we don't really have control over, but it goes up and it goes down, and all we have to do is track those statements and make sure that we're making the necessary adjustments. And this is a really, really important task so that your balance sheet is accurate, so that you're reflecting correctly your profit and loss and when those payments are made to those various expense categories. Okay, and a really, really good task that you can outsource to your virtual assistant. All right, really amazing. So if you're interested in this more, we have plenty of free materials on IncomeDigs.com. Also check out our end-to-end course, Real Estate Accounting Bootcamp. We dive deep into these topics. We start from the very beginning. We build everything up into, from simple to complex, and we get into all the various nuances of our real estate businesses. And we'd love to have you in the course. We have REAB, Real Estate Accounting Bootcamp 3.0, that's coming out toward Q4 of 2023. We'd love to have you in there. Until then, I'll see you on the next video, IncomeDigs.com, and right here on YouTube as well.